Hello, I'm Matt Kreider, insurance advisor at Pitchower Insurance. Welcome to our podcast series where we uncover the cyber threats facing small to mid-sized businesses and how they can protect themselves in today's ever-connected and digital world. Today, I have the pleasure of introducing Matt Massino, a business development team lead for Coalition. Matt has worked in the insurance industry for over a decade. He started early with Coalition as employee number 75 and serves as a representative for Coalition. Matt, welcome to my podcast.
Thank you for having me, Matt.
Anytime we hear anything in the news about a cyber attack, it's always about a big company. How real is the threat to smaller organizations, and what are some of the top claims you're seeing among those firms?
The threat to small businesses it's very real. I would say no business is safe from cyber attacks, even the small ones. According to the Global Cyber Alliance, today, more than 43% of cyber attacks target small businesses. This is unfortunate because these businesses often lack the security and the technical expertise of larger organizations, and so they're unable to defend themselves. So every year, Coalition releases our claims report. Here are some stats I have for you for 2024. So 32% of incidents involved a business email compromise. So a business email compromise is when an employee's email is accessed by an attacker. This usually occurs because of lost or stolen or even guessed passwords, but this is where a majority of our incidences are starting. 27% involved funds transfer fraud, which most folks know as social engineering. So that's when you get that email from your CFO telling you to buy a bunch of gift cards or wire money somewhere, and then you find out it wasn't the CFO, it was a hacker. And lastly, about 18% of attacks involved ransomware.
Matt, what other trends are you seeing with cyber criminals and claims experience?
Yeah, so one thing that's come up a lot in 2024 is third-party disruption. So according to our claims report, nearly 23% of healthcare businesses that had above 100 million in revenue were impacted by the attack on Change Healthcare. Change Healthcare is a technology company that was owned by United Health, one of the largest healthcare companies out there. On February of 2024, it was announced that they experienced a ransomware attack. So the attackers stole patient data, they encrypted company files, and they demanded money to unlock everything and decrypt everything. So because of that, Change Healthcare had to shut down most of its network and prevent further compromise. And as a result, healthcare providers that depended on Change's technology were impacted, leading to prescription backlogs, lost revenue, constraints on patient care. It was a mess.
So the individual healthcare companies themselves weren't hacked. It was just a service provider that was hacked in this instance.
Correct. So that's the theme here is the third party that an insured relies on gets in trouble and they're impacted as such. Right. So yeah, this wasn't unique. So CrowdStrike is a prominent cybersecurity vendor. They caused a global IT outage for their customers when a single corrupt computer file was buried in a defective software update that they pushed to their customers. So it was estimated that 8.5 million systems were impacted because of this.
So that wasn't even a cyber attack. That was just an upgrade.
Correct.
What are some of the lesser known methods of attack that smaller organizations should be aware of?
Sure. Two coverages come to mind: bodily injury and property damage resulting from a cyber event. So a great example of this would be a manufacturing company. So many manufacturers have SCADA systems or ICS systems. ICS is industrial control systems. So these systems use technology to interface with machinery. So if these mechanical systems got hacked, something like a robotic arm or a centrifuge could be controlled by a hacker. And as such, they could cause harm to people or surrounding property. Luckily, we haven't seen too many of these claims, but they definitely happen, and it's something to be mindful of.
I would imagine too, like the healthcare would have a big exposure to this too, like either technology companies providing services to healthcare or healthcare companies themselves, cyber-related exposure to causing a physical harm to a patient, as an example.
Absolutely. Yeah, that's definitely a huge exposure. And basically, anytime you're connecting technology, especially internet-enabled technology, with the livelihood and health of a person, that exposure is prevalent. If a hacker was to, God forbid, hack a life support system, they'd be able to turn it off, turn it on, speed it up, slow it down, and that patient would be in for some trouble.
Thank you, Matt. Anything else?
Yeah, one of the coverages I wanted to mention is called service fraud. So most people don't know about this, but a component of service fraud actually covers cryptojacking, which again, most people haven't even heard of. But cryptojacking is when a threat actor takes over a business's infrastructure and it uses it to mine cryptocurrency. So it might not be obvious to the insured what's going on, but they're going to get a utility bill for all the processing power to mine the cryptocurrency that's completely unbeknownst to them, and they would be on the hook for this bill. So that's something that service fraud would cover.
Gotcha.
In a report from Cybersecurity Venture, they released a 2022 cybercrime report. They stated that by 2025, cybercrime will cost the economy $10.5 trillion. And to really put this in perspective, that's more than the cost of all natural disasters combined. So this digital environment, digital business, digital world that we live in, while it's great that we could conduct business globally and we can do it quickly and easily, it also comes with the downside of hackers, cybercrime, et cetera, et cetera.
Yeah, that's tremendous. How does cyber insurance protect smaller organizations? And what are the benefits of cyber insurance that businesses may not be aware of?
I get this question a lot. You are a business owner. You go into your business to start your work day on Monday morning. You turn on your computer and it doesn't work. You have a skull and crossbones on your screen. Quite simply, who do you call? Who's going to help you? Having cyber coverage or working with Coalition, you have that 911. You don't know what to do. You call us. You'll be connected with experts. We have our claims team. We have Coalition Incident Response. They'll get on the line. They'll hold your hand and they'll walk you through the worst day of your professional life. In the very least, that is how I see cyber helps our insureds.
Sure. And the way I like to describe it to folks too, your cyber insurance serves as a prepaid crisis response team. You've got all these resources that you don't have to put in place. It's just a phone call. Well, how does cyber insurance mitigate the severity of a loss or even help with risk management? We all know it provides resources and money, but how does it mitigate those losses and how does it become a risk management tool?
Great question. So I'll use a funds transfer fraud example as my basis here. So someone approaches us for insurance. One of the questions we're going to ask them is if they have controls to monitor requests for wire fraud. If they do not have those controls in place, we are not going to offer the coverage. So that's really step one, is pointing out the hole in controls or the hole in the security. You might even have contingencies on your quotes that say, we want you to update this software. We want you to patch this vulnerability. We want you to close this remote port. Once an insured, we have midterm monitoring too. Hey, you looked great when you applied. We got you on the books. You're a great company doing things right. But oh shoot, a new chief technology officer implemented a new technology that he didn't research. We're actually going to be able to see a lot of that and alert our insured that's an issue. What we do is we alert them. 2, we provide remedial guidance. And 3, we have a security support team that actually can get on the phone with these folks, walk through the issue, walk through the remediation, and ensure that they are as safe as possible throughout the policy term.
Understood. Can you give me an example of a claim and all the different coverages that responded in the policy?
Absolutely. So a really good one that's stuck with me was we had this $50 million revenue technology company, and I believe they offered transcription services. They were hit with a ransomware, and thankfully they wasted no time and they immediately contacted us. So the first thing we did is we asked them about their backups. And unfortunately, the ransomware impacted backups. They were deemed unusable. We had our conversations with the insured, all parties involved. What should we do? And it was determined that we would engage in ransom negotiations. So the threat actor initially demanded $2.5 million, but our expert negotiators got that down to right about the $1 million mark. So you had cyber extortion that was covering the ransom payment. You had business interruption coverage that covered loss of revenue while the business was inoperable. We had breach response coverage, which covered the cost of legal fees, incident response fees, and data mining. We had the crisis management coverage that covered the cost of public relations. It helped communicate with their customers, helped communicate with their third-party vendors. And then at the end of the day, this claim, we paid out over $1.3 million. So this is that perfect example. Again, tying it back to being the 911. These folks have this worst day of their life. Their systems are encrypted. They can't access, they can't work. And we cover all of these different aspects of their business.
Yeah, there's a lot that's involved in one attack. Small firms often don't have the resources to implement robust cybersecurity measures. What are the must-haves that an organization should have, or at least put them in a good place to make them insurable?
So I'll go through a couple of examples with you. MFA is multi-factor authentication is obviously a big one. MFA increases your security because it requires multiple forms of verification. So it's just a more stronger way to sign into different applications. We personally recommend everyone have MFA on their email. This is the very least. As I noted earlier, business email compromise is one of the main threat vectors. Having MFA on your email directly mitigates this. Maintaining data backups is huge as well. So proper backups can mean the difference between a complete loss or a complete recovery after attack. So we recommend both on-site backups and off-site backups. It's critical that the backups are fully tested. The last thing you would want would be to have false confidence you have these controls in place. You have a claim come in, worst day of your life, and then the backups don't work. So that's a huge thing too. I would also add that ensuring remote access is secured. If it's easy for an employee to connect to their employer, it's easy for a hacker to connect as well. So we recommend that all remote access points should not be publicly accessible. They should have MFA, very strong passwords, and encryption in the least. I have one more for you. Again, this is very simple, but it's ensuring that all software is up to date. So make sure your software is up to date. Make sure you have good patching cadences where you're checking on this remotely. It's just critical to have these basic controls in place. The better you can protect yourself, the better shape you'll be in.
Gotcha. And how does Coalition underwrite small business?
We have an application. We ask 11 basic questions that are about our insured's threat, attack surface and threat landscape. And once that information is reviewed, we actually go and take a look for ourselves. So like you'll notice on our application, we don't ask about firewalls because we actually will go and look for firewalls ourselves. We basically underwrite like how a hacker would hack. And the way we do that is that we scan our insured's public-facing technological infrastructure. And the way I explain this kind of in layman's terms is it's like you're driving around a neighborhood. You're looking at houses, you're seeing if the doors are open, the windows are open, is there a fire escape? But instead of houses, these are actually IP addresses. Instead of a neighborhood, it's a network. Instead of windows, it's ports. So by understanding how the criminals commit their crimes, we actually underwrite against it, provide remedial guidance, and like I mentioned before, contingencies to actually prevent these situations before they occur.
Is there anything an organization can do that would lower the cost of cyber coverage?
The more controls that are in place, the better. The more safe they are, the lower premiums we'll charge.
One thing I'll share, we can't expect our clients to review the cyber policy line by line. So as a broker, that's really my job. I really have to read these policies to ensure that they're adequately protecting our clients. So the benefit I found is that cyber policies are very customizable, which is important because law firms' exposures are going to be very different than a nonprofits or manufacturers. Can you share some examples of how cyber insurance can be tailored?
Absolutely. It is customizable. You can tailor it to your customers. A couple examples of where I would think about that. One would be like for a manufacturer, they have that unique exposure with SCADA systems and ICS systems where they might have robotics that could be hacked. So I would recommend manufacturers look into bodily injury and property damage coverage. I insure a lot of real estate and typically asks to have coverage for individual contractors. So instead of having our named insured read as an employee, we'll actually add an endorsement on to provide coverages for the independent contractors too.
So if the independent contractor is using a computer system or application that the real estate firm is using, and that gets hacked, let's say the individual contractor makes a mistake and lets in a bad actor, the policy will cover that.
Correct. And that's the main concern there, is that often these real estate companies have thousands of folks working for them. None of them on paper are an employee, yet all of them are using the systems and maybe even the hardware too that connects to the parent company. With real estate risks, I always get the question, is funds transfer fraud provided for funds held in escrow? And the answer is yes. That's something we do offer by default for our law firms and risk.
Yeah, you mentioned law firms. I was just going to say law firms handle escrow accounts. We also find it too with financial firms such as financial advisors, others who are managing other people's money. So if that money gets wired out to the wrong actor, we want to make sure other people's money are covered as well.
Correct. And we actually have an endorsement that amends funds transfer fraud. So instead of the funds being held by the insured, it's funds the insured's holding on behalf of others. So that's a key point.
Matt, I want to thank you for joining us and really appreciate you sharing your expertise on this important topic.
My pleasure. Thank you for having me.